I'm going to introduce Anka Metcalf, and she is one of our favorite speakers in our Women in Wealth events, highly sought after professional with 20 plus years of trading experience. She's also the founder and CEO of Trade Out Loud. It's an international trading education advisory company. She's translated complicated technical analysis patterns into more simple, understandable, applicable methodology that helps traders become consistent traders in a fraction of the time. Raleigh, what is Anna going to teach us today?
Well, today she's going to talk about becoming a breakout pro, because that's one of the things she likes to focus at, is those breakout opportunities, as all of us as traders are. That's what we really would like to see. And she's going to share how to spot and to evaluate a proper breakout opportunity, because there are such things as false breakouts. She's going to share the 3 strategies for trading breakout market moves and how to use when you're day trading or swing trading or even investing. So you can use this technique across the board there. And with that, let's welcome Anka to the room. Hello, Anka. How are you doing?
Hi, Anka.
I'm doing good. Thank you so much. Thanks for having me. And I am doing a revamped futures presentation here with Breakout. So I'm very excited. I don't have my camera on. I'm actually coming from 2 other events that I have been invited today. So it's been kind of hectic here.
Oh my gosh.
I know it's been one of those days, really crazy, but I can't wait to show you live because we have some really beautiful live examples in the market. We have them in the Q, we have them in the diamonds. The Qs are a little bit weaker right now. So we have the Dow, which is setting up either make it or break it, upside or downside. So we're going to talk about the 3 options of how we can evaluate these ranges, at what step in the market stages they are forming, and how we can trade them. But I will also like to focus a little bit more on how you can determine these patterns, day trading, swing trading, and today it's a little bit more focused into day trading. Definitely switching up dialing up the time frame. You can apply them into the swing market and also into investing. So thank you so much for having me here today. And
well, we're delighted. We're delighted. We see you. We got your screen. We hear your voice perfectly. Anka, take it away.
Thank you so much. But before I continue, I just want to tell you something really quick. In regards to your prior question about the biggest merger in history into the auto industry. Now, Fiat, Chrysler, and Peugeot are together, and they formed a new company. It's called Stellantis. And this is actually a recent new name change that they have. All right, so everybody, let's jump into the presentation today. I will be talking about generating a 6-figure income, and one of my favorite strategies is to trade breakout and breakdowns, but not before giving you a little bit of reminder here about our risk disclaimer that all the presentation today is for educational purpose only, should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind. All right, so thank you so much, Pat, for the wonderful presentation. I have been an independent trader for over 18 years. I am focused on day trading futures in the first 2 hours of the day, and I trade equities as well, and I swing trade equities. I have been an equities trader for more than 25 years or so. So for the last 18 years, I have been full throttle trading my own personal accounts. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking that gave me the foundation to jump into what I'm doing today. So I was very fortunate to have experience on the institutional side. Like Pat has said, I'm the CEO and founder of TradeOutLoud.com, which is a trading education that is focused on educating individuals how to day trade and swing trade the futures and the equities market. And this is what I do every single day. I'm also the designer of an institutional proprietary trading system. And the reason why I'm the designer is because, guess what, guys? I cannot take credit for it because I did not invent it, but I had to apply it in order to trade my retail size account. And the system is simple, is based on price support resistance, but there's a catch. I am focused on 8 layers of price support and resistance, which is not complicated to design on the technical chart. I will show you some levels that I'm using on my technical charts. These are in correlation with specific times, and especially when we're talking about day trading, because we know that the day trading market is dominated by high frequency trading computers. It's dominated by black boxes, gray boxes, all kinds of algorithms. So you need to have a lot more precision than you needed to have about 15 or even 5 years ago. Also, because I've been trading for so long, day trading for so long, I have developed specific time zones because I've noticed that at certain times throughout the market, we're having some more energy into moves to the upside or to the downside, and correlating this with specific price zones, because this is the best kept institutional secret. Institutions cannot leg in, for example, at one specific price all their size. So they're legging in. So they have these 4 price points. They're exact price points for charts. And these are the areas where they usually use 5 or 6 scales. So 5 or 6 scales. To get into a trade and to exit into the trade. So I put together these specific trigger times along with these locations on the technical charts, along with multi-time frame layered of price support resistance. And I got the magic formula for myself, and it has been working like a charm. And I love it. It's like having your own algorithm and sort of like having your own crystal ball. I also pay very close attention to chart synchronicity, and I'm going to share with you in just a moment to show you how synchronicity works. It's synchronicity or divergency. And when you're having, for example, 3 indices or 3 ETFs or 4, because we're focused more on the Qs, the SPYs, and the diamonds and Russell, right? And if you're trading the futures market, the equivalent is the futures Nasdaq, the S&P, YM, and Russell, RTY. So they're always in a leader laggard type of leaderboard. And when they're in some cases, they're leading. In some cases, for example, you have Nasdaq ultra weak today. It is down 315 points. It is down 2.44%. And then you're having on the other pole, you're having Dow, which is holding because you have so many stocks that are under the Dow that are so strong today, like Boeing. Financials are incredibly strong. Believe it or not, Citi created a brand new high today. So very, very strong. And of course, you have, when you pick your day trade or your swing trade, or even, not really applicable to investing, but when you select what you trade, you really want to make sure that you're in sync with the market. And for example, days like today can be a little bit more challenging, because if you happen to take a trade into an index, let's say long, that is relative weak, that may not have a good participation for you and may have the tendency to stop you out of the trade. So I specialize in high velocity moves because I have determined these parameters, and it's very easy for me to actually have a good gauge of what's moving and in what direction, and how that is going to play out. All right. So if you guys want to get a hold of us, you can head onto our website, and our handle on social media is also Trade Out Loud. So we're going to jump into futures. So knowing pattern recognition is very important. So knowing how the pattern works, we were able to generate $162,000 per contract on any given move, by one contract, 4 per trade on what we have traded. And I only trade between 1 and 3 day trades a day. So that's, a very small amount of day trades, because my system cannot recognize them, my system being myself, by the criteria that I apply, cannot identify more than 1 to 2 or 3 trades in a day. So I'm going to share with you some examples of some trades that we executed today. And also we're going to get into that range bound market, which is ultimately my biggest favorite of all. All right. So this is only by trading, guys. drum roll, only 6 charts, and basically only 4 charts because I focus more on the indices for a very long time. Oil and gold were really not tradable on smaller time frames because they have had a lot of volatility built into them. The stocks were incredibly wide, even with position sizing, so they were not our prime candidates. So basically 4 indices is what we focused on. In the month of January 2021, and we have the results from last year. And in fact, you could go to our website and under each service, scroll to the bottom of the page, and you can see the results from day trading and swing trading. They're above average, and this is what I focused on. I've been doing this literally my whole entire life, and my whole career has been around financials and around trading. In January 2021, we ended the month with $26,000, and this is by contract. It's not my realized P&L. This is by contract. And if you probably would have, you know, position size, depending on your account size, you could have a little bit less, you could have a little bit more. This is based on an account that that I would say like a minimum account. So the results are based on, let's say, a $30,000 to $35,000 account. You could achieve this. Smaller account, for example, slash it into two, a $15,000 account. So you could expect probably half of this result by following and by trading 4 charts a day and only trading 2 hours every single day. These are results from February. We also have closed the month of February, and this is $12,700. And this is the month of March. So we only have 3 trading days. So you can see here in 3 trading days, we have over $1,800 in profits. These 3 right here are our last trades for today. Funny enough, we had our biggest gainer was in Nasdaq because the Dow is so range bound and we wanted to pick it. You could see here, everything was long. So the Dow was actually, we were actually looking for a breakout that I'm going to show you in a little bit. So we were looking for a breakout, but we managed to take some profits from that and never achieve the breakout spot. So we're really looking, into that pattern. We still have alerts on it because if that's going to break, it's going to head on higher. And if it's going to break to the downside, then it's going to, I'm going to share with you those thoughts in a second. So I don't want to divulge anything right now, but anyways, Nasdaq was the biggest winner. Surprise, surprise, to the long side, where we managed to get $32,640 per contract. So I'm going to share with you the trades that we have done yesterday and today for the month of March. And you could see that all of these charts have some notations. They either have some dotted lines or have some, notations on them with the bullish above. These are confirmation points that we manually trace at the beginning of the trading session. So I collect all the information. It takes about, I would say, 5 to 6 minutes before you actually place a trade. And these levels are valid. So I trace these levels at 9 o'clock. I teach traders how to trace these levels in our classes. But we actually design, it takes us about, I would say, 5 minutes or so to trace the levels at the beginning of the trading session. And these levels are valid for a 24-hour cycle. And then they reshuffle again. So the next day when we want to come back into the market, we are going to have different levels of trading. So this is a trade from yesterday. We have, so you can see here that we have the confirmation because it's bullish above, and anything that is setting up above the bullish above spot will actually trigger long. So this is not a breakout per se, but this is actually something that is coming from, well, I would say it's coming from a really larger time frame breakout, but it's still not coming from, you cannot see it here on the 2-minute breakout. So these breakouts are very powerful because once they break above, this bullish above is actually it's actually an indication that anything that trades above that purple line is going to be bullish. But the trade in its essence, it's not a breakout, but this is a pullback buy off the 10 EMA. I only use very few moving averages. I use the 10 exponential moving average, and this is on all my time frames, the 20 simple moving average, the 50 simple moving average, and the 200 simple moving average. And the rest are proprietary notations that are coming from those 8 layers of price support resistance that I was mentioning in the prior slide. And we were able to chunk in a little bit of a profit because in trading, it's all about, capturing a portion of the profit. It's not like living in. You want instant gratification. You want in, you want out. So we got in at 533. We had a stop for 50. And by the way, just a quick thing here that I wanted to highlight: in high volatility markets, your stops are always going to be wider. So position size appropriately, and their trades are always going to be asymmetric. So you are going to receive lesser R's for your risk. Like I said, the profit per contract was $355. Okay. All right. So let's move on to a different trade here. This was also, and this is a good representation for smaller accounts, because smaller accounts can also participate in any move or any call that we make into the market. This is, for example, MNQ. So in MNQ, we were able to make an 80-point move, and that 80-point move generated over 160 points. So I'm sorry, $160. So smaller accounts, you need to know that MNQ is the micro mini Nasdaq, and each point is $2. So that's very, very cheap. You could definitely trade that with way smaller accounts, even accounts that are below $5,000. So I'm just going to give you an example. This is the entry, and this is the breakout spot. And you can see that these breakouts generate above average gains. And this is what I love about these breakouts, because once you know how to trade them and how to determine in which stage of the market the breakout is happening, you can make a lot of money by capitalizing on these moves. So like I said, you know, for a $5,000 account, $160 is a 3% move on a trade. Now, if you guys are familiar with hedge funds, I worked for one for many years, and we average about, in hedge funds average about 3 to 7% per year. Okay, so per year. So they're looking for gains per year. They're very conservative. They don't, you know, literally use a lot of stops. They let the trade play out. So it's a totally different ball game. But listen, 3% in a day, I take that any time of the day and night. Again, here's another illustration of a breakout. This is a smaller type of range of breakout. We have the long here with the confirmation. And we also have support at the very bottom. And you can see here, we had a total profit of $375 per contract, guys. And this is per contract. Also, this is a trade that we have done today in the market, and it was wild. It was on the long side for Nasdaq. It was a short squeeze. It was a little bit different strategy. But the reality is that if you look at this trade that we have right here, it's actually coming from a range breakout. So this is the entry point where we got in. This is the breakout. You can see that a lot of times after you're getting a breakout, you're often going to see a pullback. Not all the time. I said often, and then you're going to see the big move to the upside that is actually happening. So in this trade, we got long at 888, and we had targets into 900, and I said maybe it's going to try to go to 908, but when the price started to take off, we had a target at 920. We took profits, instant gratification, $640 per contract, and we were out. Also, same kind of chop fest that we had into the Dow. You can see here that if I bracket the highs and the lows right here, we had a little mini range that was happening for about, I would say these are 15-minute candles. So for about an hour or so. And no, this is a 5-minute chart. Sorry about that. Okay. So yeah, so we did have this consolidation. We actually got in long over here. So this was our breakout point. And then again, we had a target right here, very, very small target. We had it from 50 to 80, 30 points. We had $150. That was not bad because the market conditions are not very favorable for any kinds of, longer term trades. So what do you need to do in order to identify these ranges? Well, first of all, you need to have very good understanding of the trend. You need to have education. So you need to know what trend the trade is in. So you need to have the directional bias, strong directional bias. And if you have multi-time frame, because I do not trade anything without multi-time frame confirmation. Multi-time frame confirmation is what's giving me accuracy. The other thing that you need to do is pattern recognition. Breakout patterns and breakdown patterns are the easiest patterns that you can recognize because they are either consolidations that I'm going to show you in just one second on the technical chart, and depending on in which stage of the market they're in, they can pretty much have really nice, significant movement. So a breakout is recognized by a revisiting of the higher highs and higher lows. It's a succession. You cannot talk about a range unless you have two highs and two pretty much equal or about equal lows. So the general formula is two highs and two lows. And you guys know, I'm just going to add this a little bit so you guys can know a reversal in the trend or how to read a trend. A trend, especially an uptrend, is when you have at least two higher highs and two higher lows. Okay, so everything is in two. Just like the candlesticks, for example. And when you have, for example, you have a red candlestick here. You cannot talk about any kind of momentum move unless you have a break to the upside or you have a break to the downside. And when you have, for example, here you're having a move, this is a typical rotation because the price here, let's say, went down, and here you have the rotation that is taking the price back up. This is exactly when I'm talking about, price continuation, price movement. So a candlestick cannot, one candlestick cannot provide you with the whole entire information. But when you have the next candlestick that it confirms or negates the prior high or the prior low, then you can talk about either a change in the direction of the momentum move, or you could talk about a continuation depending on the color. So it's red to red to red. And then when you're having the rotation, the green that takes out the red, then it's green, green, green. It's all about momentum. So coming back to the range action, once you have your two highs and two lows, this is the prime definition for your range bound market. Basically, there are three ways in which you can trade this. First of all, what I like to do is I like to bracket the highs and the lows. Option number one right here, okay, is basically the easiest one to follow. And you're going to be waiting for price confirmation. So you're going to wait for the price to go higher, and you're going to look for the price to do this peekaboo above this prior high, and the prior high. This is the classic breakout. And this is going to be your entry point. Now, remember, the entry points need to be a few cents or a few ticks, depending on what you're trading, stocks or futures or cryptos, right? The price needs to take out these highs so it can prove the pattern that it takes out that highs and prints new highs than the prior highs. And then the price goes up. So this is going to be your entry. This is going to represent your stop. Make sure that you place your stop always below pivots and below the lowest point right here, so you are not going to be taken out. And when you initiate the trade, if the distance is too wide between the low and the high, right, make sure that you go and position size. So not only when the distance is wide, but all the time, position size. And if you see that the risk exceeds the size of this range, sometimes the ranges are really tight and sometimes the ranges are really wide. For example, right now there's a 300-point range into the Dow. Okay, so maybe you want to wait for the breakout, but if you want to play the strategy by the book, this is where you need to place the stop. So definitely on a 300-point, and this is intraday. It's not even on a daily. It's not a swing trade. It's a day trade. So it's setting up like this. So you really want to make sure that you apply the proper risk management for your trade. So this is the entry. This is the stop. And this is option number one. Now, option number two, we have when you have the confirmation of the two lows, it's fine if you decide to buy it at the low. But when you decide to buy it at the low, you just don't buy it on support. I never buy on support, never buy on support in an uptrend. I know it may seem odd because some of you are going to say, oh yeah, but that's where you buy it. You do, but there's a catch here, because as the price goes down, let's say these are candlesticks and the price go down, 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 right? I don't buy off support, because if I have an issue of continuation lower here based on the current momentum, the price can actually escape into a breakdown. Or if it happens during doldrums, this could actually be a bigger shakeout and the price can go back up. But what I typically do, for example, is I see the price 1, 2, 3, 4. I love to see 3 to 4 candle pullback, especially intraday. If you can count a 4, you can trade. And then here on this rotation, let's say this movement, just ignore this. Let's say here we have a candle that takes out the prior high. This is going to represent my entry right here. So this is my entry. This is going to be my stop right here. Okay, let me just take a different color because I made a mess of this. This is going to be my stop, okay? And now the price is moving higher, higher, higher. Now, by the time it gets into this high, remember, I'm making profit. So I'm making money from this rotation point, and from this stop, I'm already making money into the breakout spot. So what I do at this point, and what I forgot to tell you is that I usually buy half. I usually buy half on this rotation. By the time it triggers and it takes out all these highs to the left-hand side, okay, now I add my other half in. By the time I add my other half, I'm sitting on cash. So I'm trading right now with the bank's money. Isn't it cool? So I'm not reinvesting in the market because I'm already trading with this profit right here. So it makes me feel very comfortable initiating the other half in. And the rest is history, okay? So this is option 1 and option 2. So I'm gonna erase everything here and I'm gonna show you the option 3 right here. So there's our range again. So what we're gonna do is we are going to bracket it again, right? I love to use these lines because they help us all the time. Actually, this is actually an entry which is safer. It's safer than the breakout and it's safer than the buy off the rotation here. This time around, and especially when the difference between the stop and the trigger price is too high. For example, in the Dow, like I said, we have a 300-point stop level and range rather. I like to wait for confirmation for higher. So I'm not going to engage and I'm not going to buy into the I'm not going to buy into the breakout, but I'm going to wait for the price to go higher. Okay, hold on. I'm going to wait for the price to go higher. And then at one point in time, I don't care. I don't care if it's going to the moon. I'm just literally, waiting patiently for the price to do what? I'm waiting for the price to retest. And when it retests, it pulls back and it likes to pull back and retest the prior breakout spot. When it retests the prior breakout spot, the next rotation, everything is with price confirmation, is going to push the price higher. So in this case, when I initiate the trade, this becomes my entry and the green one becomes the green candle becomes my entry candle and my stop is way here. So you can see that my risk is way smaller than I would have applied into this spot. Okay, so this strategy, you need to know exactly what trend the market is in. And I actually started with that concept. So it's very important to understand the stages, because in a very strong market environment, if you have, let's say a stock or an index that is coming from a point A and it's going, let's say, to a point B, and then, this is an uptrend, right? So you're having a series of higher highs and higher lows. And if you're reaching into the highs right here and then you're ranging, then remember that an object in motion tends to remain in motion. This is what Sir Isaac Newton said, right? So the natural price action reaction is for the price to continue higher. And this is called a stage 2. Sorry, this is called a stage 2. This is called a stage 2 accumulation. And this is called a stage 3. This is the indecision stage. And oftentimes traders mistake this and say, hey, this is going to pull back. Not so fast, because when you're looking at technicals and if higher timeframes are dictating higher, this is what you can expect for a continuation higher, and obviously in reverse for downtrends. Okay, so let me just clear this out. All right, let's get my mouse back. So obviously you need to have the proper education in order to trade these ranges, but trading ranges are not hard. You need to have discipline because, as you saw in the last example, we need to wait for the price to pull back, rotate before it goes higher. So everything is with price evidence. You never buy into support and you never short into resistance. And if you do that, you need to wait for price confirmations for those price rotations, either red to green or green to red, to take those candles out before you have a confirmation in the move. And this way, you're not going to be dinged out of the market that fast. You also need a lot of discipline because by having discipline, you're reinforcing your obviously goes hand in hand with patience, because you need to have this, you need to have the pattern formation. For me, if I have a pattern, I have a trade. If I don't have a pattern, I don't have any kind of trades. And I wait for pattern recognition. I wait for the pattern to form. I wait for, to be able to recognize the pattern in an ongoing trend or in a sideways market or whatever the case may be. And then I need to focus, 100% focus. So for me, when I'm trading, I don't have any distractions. I don't have the TV on, my phone is off. I don't even have it near me. So I don't have anything around me other than my charts and my trading, and that's it. And then again, you need to know how to follow directions and your own instructions, because that's very important. A lot of traders, lack the patience and they jump into trades, and that is suicidal. So I want to bring the charts right here, quickly. I just want to make sure that you guys can see the chart right now. Okay. Perfect. I could see it on my end. So let's talk about the range that we had in the Dow. And I'm going to tell you exactly how we can potentially trade this. Okay, so we're going to pick this up, and you can see here that I have a notation which says breakout, right? Which says breakout right here. All right, this is going to be the breakout spot. This is support, not so fast into the breakout process, because you can see we have heavy divergence that goes into the Nasdaq. So obviously this is actually a textbook, stage and stage kind of process, because this is the low, this is the high, this is the low, and look at how this low right here influenced the rejection reaction, and this is what actually started the downtrend into. This is a powerful downtrend. I don't know, 1, 2, 3, 4, 5, 6, 7, 8, 9. Excuse me. It has been selling for more than 10 hours. So how can we trade this breakout? Actually, this is more favorable more favorable to the breakout side than to the breakout to the breakdown side, because it's still into a very strong trend. But it can be traded to the breakdown as well. So like I said, repeating the options that we have for this strategy, we either decide to take it above 31,600, place the stop below, but you need to have the price actually over 602, right? So you need the price to take out the highest point of this range. Option number 2 is to watch very closely here as you're getting a rotation, and usually you have this on a smaller time frame. So not on the 1 hour, this is on the 1 hour, so I can show you the bigger range. But typically I go to the 5 minute, or I could go to a 15 minute. When the market becomes more violent, I like to go on the 5 minute for confirmation on the 15. So you could buy it, for example, on any rotation into this spot, and then take half a position, wait for it to go higher, but only on confirmation, because if you buy it here on support, like I said, you could end up losing money. And then again, here at the very top, you add the other half in. And of course, the other option number 3, is to see the breakout and to see the retest. So you don't care how high is it going to go, because usually the first impulse, the algos are going to be all over this move. And so probably it's going to go for about 35 points to 50 points or 55 points. And then we're going to probably see a turnaround, and you could buy it here at the turnaround. So this would be the entry point. Okay. So I'm going to show you now what we can refer to as the breakdown spot, right? So the breakdown spot is a little bit more difficult in an uptrend. So what I do recommend for the breakdowns, you can see here the little bit of push that we're getting to the upside. Okay. So the breakdown, you would actually have to see a bar. I want to show you. So if you have a candlestick that breaks below, right? That breaks below here. See the size of the candles are pretty wide within these ranges because of the volatility. Wait for the price to move back lower. And again, this is going to be traded only on a retest level. So it's not going to be traded as a breakdown. So the change in the trend is totally different than within a trend. So on the change of the trend, you need to see the price verify the downside. You wait for it. You don't trade it, as tempting as it is. I don't care if it goes down 100 points or 500 points. I don't care. That's not a trade for me. And then you're going to wait for the price to move back up. And it's going to go like bang, bang, probably like this. And if the price is going to get rejected, because this area right here that we have to the left-hand side, this is support. This support is going to influence right now and create resistance at this point. And actually, this is called minor resistance, which is much more powerful than major resistance. So at this point, you're going to look for another rotation that is going to take the prior low of the green candle. And this is going to be your entry. So instead of having a 300-point stop, which is kind of silly at this point, right? You're going to wait for the retest, and we're probably going to get like a 50 or a 60 point, even with volatility. Okay. Okay. So Al, you have a question. Can I go to the 5 minute? Of course. Okay. Let me just clear this out, and we could put the 5 minutes. So I can show you right now the 5 minute and the power of the 5 minute. This is what I trade every single day in the trading room. We actually trade the 1 minute, the 2 minute, and the 5 minute. I love trading these moves that are accelerating down right here. These are not breakouts or breakdowns, but I'm glad we had one from the trading session today. Okay, so what you do here, because you're getting very closer to the support spot, you see here these highs. These are highs that were being tested. So you want to buy it over 425. This is also another indicator that I use. These are some pivot points. Usually you're getting a lot of selling pressure from here. This is not really a great, fantastic buy because you needed the price to punch in a little bit lower. But if you're getting a rotation, I'm going to give you the exact number so you can watch it as we're going through the presentation today. So if this is going to get over 410, it needs to print a 410 to 413. It will move. I would say it almost is going to move into the 425. And then from 425 to 445, it's going to have a really hard time. Okay, really hard time. At this time of the day, Al, I don't really like to teach traders to pay attention to the 5 minute, because these are moves that are getting ready for the end of the day. So 15 minutes are going to be in play right now, big time. Okay, big time. So I'm going to give you some examples right now. Watch these charts. It's still very early right now. It is 2:40. You gotta wait about 5 minutes. Okay. I wish we could have done like old charts today, but I do have a lot for you guys in this presentation. So wait for this candle to close. It needs about 5 minutes to close. Each candlestick on the 15-minute charts obviously has a live duration of 15 minutes. You could actually go to a 5 minute if you want to be a little bit more aggressive, and you could take the 5 minute rotation into this move. Let's go here. Okay, so see it triggered. So it's probably going to go into the 25s right now, but it's going to have a really hard time. One other thing about ranges that I wanted to mention is that, and when you're going to an hourly range, and especially if you're a day trader, you have to please take into consideration higher time frames, because a lot of traders, I'm telling you, 90% of futures day traders, I don't know, stock traders, they know what they're doing a lot more than futures traders, but futures traders in general are ignoring the higher time frames. And I don't know why, because if you would have looked on the 5 minute chart or on the 2 minute chart, you would not be able to see this range. You have to zoom out to the technical chart in order for you to see the higher time frame and how that is going to play out. But definitely, if you want to go for a short squeeze, definitely you could do, for example, the 2 minute here. Okay, the 2 minute rotation. You can see here, this is an inside candle. This is your entry, 694. Your stop is going to be below this low right here, and monthly low, bearish below. You can see how we have the notations here. It's like super simple, no brainer. And then your first target is going to be into 711. Your second target is going to be into 30. Your last target is going to be into the 757. So there's always going to be. And by the way, guys, one of the things that I love to do, especially when you see a massive downtrend, for example, like in Nasdaq, always expect the ramp time, which is coming in around 3:30 or so. So that is the heaviest volume that you can see in the market. So they're going to take a lot of profits into that point. Okay. So let's continue with the presentation. I'm going to skip through some slides a little bit. So I guess in trading, you guys know there's no average because you're either great or you're losing money. So you have to really know what you're doing in the market. The market knows exactly how to take the money away from novice traders. So this is really sad. So what I trade, I love to day trade. I love precision trading. Love precision trading. So I trade the Dow, the SPYs, Nasdaq day trades. And I also swing trade stocks. I pick them by relative performance. And there's one thing that I didn't mention here, and I did want to mention. And I'm going to go back to the 1 hour because this is my analytical time frame. So I can't do anything without this time. Or this is the 1 hour. Okay, one more here. So I want to show you because we talked about the divergency and synchronicity and divergency. So don't you think that this is divergent compared to Nasdaq? Nasdaq is green, 0.20% up, and is still trading into the range. And then Nasdaq has this power move to the downside, which by the way, is bearish, right? So this is bearish and has reached a monthly low, bearish below. And you can see here that it's breaking below this low right here. It's going to go back into the next support level, which is the 12,465. So it's all about ranges. So if the price is going to consolidate within this and this support and now this resistance point right here, then on a break of 659, it's going to start moving back lower again. It's all about that break continuation. Okay. One other thing that I wanted to add, if you see any kind of other technical pattern that is happening within the time frame that you're trading, that is going to be very difficult to trade. Okay, so any pattern that is happening within the range that you're trading is going to be really, really hard to trade. Okay, so be very careful with that because a range is a range. It should not be taken into the context. Let me show you another range that we had here. And this came about this happened like 2 weeks ago. A lot of times indices are reaching indecision points and stocks as well, no matter what time frame you're looking at. But you're having a point of resistance, you're having a point of support right here. So, you know, sometimes you're getting the breakout and then you're having the retest and the failure back down. This is called the chop zone. You see it here. I had it notated for my traders that any trade that would set up between this support and this resistance would have taken anybody out. But of course we do actually scan into smaller time frames. 1 minute, 2 minute is what we trade, and then going to the 5-15 minute as we're going through the day. So trading is a rule-based system. It's about finding high-odds trades and waiting for the proper setup, whether it's a breakout, whether it's a breakdown, or any kind of technical pattern that you're trading. You have to find you have to find really precise and fine execution. You have to have that. Money management skill is number one. Remember position sizing for each trade. There's no such thing. I have a $20,000 account. Let's say in the futures market, I'm trading a constant of one contract, or, you know, a standard of 2 contracts at the same time. This is a disaster. It's a recipe for disaster, because at one time you could have a trade with a stop of 20 points, let's say in the Dow, and sometimes you could have a stop of 300 points in the Dow. So do you imagine what that's going to do for your account? And of course, to have patience. I love to trade futures. You have huge advantages of trading futures. I have switched to day trading full-time futures. I was 100% only geared on stocks for 25 plus years. I have switched to the futures market about 8 years ago. It was a simple switch that I did for tax purposes. Advised by my accountant because I was making it was a really hard process for, and tax wise and etc. I'm not going to get into that. You can Google advantages of futures trading and you're going to have their plethora of pages that are going to tell you why you need to switch to futures trading, especially when you're day trading or when you're hedging. I love to hedge in the market. For example, you know, you're long some positions, you take a hedge when the market, you know, on technicals, right? On strong technicals, you can take a hedge, for example, in the S&P, or you could hedge with the VIX. Okay. So you have tons of advantages. I love the fact that in the futures market, any account size can participate. In the stock market, you know that you need to have at least $25,000 to $30,000 to open a day trading account. In the futures market, all you need is $5,000. There are brokers out there where you can use less than that. I really don't recommend that if you're really serious about trading, about making money. We have traders in the trading room that have started trading with, believe it or not, this minimum of $5,000, and they were able to make a really, really good profit on this $5,000. Commissions are very low, so that's a huge advantage. And you can take advantage of micros and have realistic expectations. Don't expect that if you have a $5,000 account, you're going to make $10,000 in a month. Okay, so there are huge advantages of trading the futures market versus the trading versus the stock market. One of the biggest advantages is the buying power. So for example, if you want to buy the Qs, I know we talked about futures, but if you want to buy the Qs, you can play the same strategies. And for example, you need about $16,000 to trade with 100 shares if you want to trade the Qs, right? And you're going to make a profit. And this example is from the other day. And you're going to make $237 on this implied move on this one trade. Let me show you Nasdaq on the same trade, same setup, same duration and time. It was about an hour that we were in this trade, and with one contract, $2,000 with the same buying power. So you're using the same buying power, but you're maximizing your profits 10 times. And micros, small accounts. Remember the $5,000 accounts? You're going to be using $1,700 of your buying power, and that's $181 on the trade. So that's 3% on that trade, on that $5,000. Do that every time, or do that as an average 2 to 3, I would say 3 times or 4 times a week. We have very, very few losses in our trading, very few losses. You can visit our portfolio. You can see all the trades that have stopped out, all the trades that worked, all the trades that hit targets, all the trades that were break even in our portfolio. I trade just 2 hours a day because I want to capture the sweet spot. The sweet spot is the overlap of the London session with the New York trading session. And by the way, I swing trade a lot as well. And I apply these range strategies into my swing trading. Love swing trading these ranges. We haven't really had a lot of ranges right now. But for example, Intel right now is in a range. We have Microsoft that is breaking down from a range. We have the bonds that are breaking down from a range right now. We have copper, which is in a range right now. So there are a lot of trading opportunities. And whenever the market is hitting the indecision phase, I, as a trader, make a lot of money because I know how to trade these ranges. So is it easy to succeed in trading? I know maybe some of you guys, are very new to trading, and this may have been already in a very super advanced concept. But it's not hard. If you lose money in trading, you can make money trading. And don't forget that trading is not just only about one strategy. It's easy for me to talk about our ranges because I know the system. I know how trading works right now after so many years, and I could teach you how to do it. But trading is basically, a set of strategies. It's management, it's mindset, and experience, watching the charts, watching price action. Something very simple like watching price action. You can actually learn a lot from just watching price action. Decide on a time frame, depending on your lifestyle, whether you have a very active lifestyle and you can not be in front of the market every single day. Not a problem. You can swing trade. If you would like to dedicate 2 hours a day to trading like I do, and I call myself I like to call myself retired because I'm only trading 2 hours a day. And when I'm swing trading, I'm only swing trading. Basically, I'm monitoring my trades less than 10 minutes a day. I do work in the weekends a little bit longer. So I do scan and do my homework. It's a it's a work in process of about 8 hours. So I started on Friday, do a little bit on Friday, do a little bit on Saturday, do a little bit on Sunday. I want to see how the future market opens on Sunday. And then, you know, I can clear up my trades, my ranges, etc. And then I can release my trades. I put my trades on and then I'm done. Okay. So I put my trades on Sunday night and then I'm done, or on Monday morning and then I'm done. And that's my work. Okay. So learn to trade before you dive in, because you have to learn how to swim with the big sharks. The institutions are the big sharks, and traders need to learn how to swim with these sharks. Institutional sharks see your orders for their breakfast or lunch menu, or if you're trading at night, on their evening menu, because guess what? Our brokers are selling the data to hedge funds, right? You guys know that Robinhood sold data to Citadel, right? You know about the whole GME thing, GME and AMC and all BlackBerry and everything that they were trading, and Rocket Mortgage yesterday, right? Institutional money create the big currents of the moves. You know, as experienced traders, you shouldn't have any fear, because if you know management, trade management, money management, you have no fear, because you're risking the same amount every single time. So the next time you want to hit the buy button or the sell button, think about this. Would a hedge fund do it? So if you think that you don't have the patience to wait for a setup, okay, just think about it. Would a hedge fund take the trade here? Would an institutional trader take the trade here? Would a prop company or a market maker or a hedge fund or even an algo would it fire a trigger here? So then if the answer is no, don't take the trade. So the next time you jump in the market, think about this. 10% of the traders make money from the rest of the 90% of the traders, okay? If trading was easy as, you know, finding that perfect system, that perfect indicator, it doesn't work. Okay. By the time you learn how to use an indicator, and it's fake, it's not price action. You need to learn how to simple pattern price action is back to the basis with everything. Traders have the tendency to overcomplicate it, and they're always searching for the holy grail, saying, man, I really need that indicator that is going to tell me this and that or whatever. Guess what? Take some time, learn it, and you're going to have your crystal ball, just like I do. Trading price action, pure price action. So futures is awesome, as well as trading stocks. You can trade from home. You can create an income from home, day trading, also swing trading. You can build on to your long-term money. You can have your long-term money working for you. You either create income or supplement your income, a limited income potential, because when the market starts roaring higher or pulling back lower, you actually can make more money on the market going short because of the panic. You can make money from recession. It's a depression-proof skill, so it's absolutely wonderful. For our win ratio, we have a win ratio in both programs. In fact, the stock program, this is day trading, which is way challenging than the swing trading program for stocks. And in the swing trading, we have and you have our access to our portfolio, which is on our page under each service that scrolls to the bottom of the page. We have over 87 to 90% win ratio on our trades. It was just phenomenal. So in trading, you should only have 4 outcomes. You either have home runs, big wins, small wins, break-even trades, and small losses. So we trade every single day live, whether day trading or swing trading, whether stocks or futures, a very successful technical system. Everything is technical. That follows institutional money flow in the first 2 hours. That's what we do for futures market, and profit on momentum moves. Careful on specific times, locations, and precise technical patterns. So what does this mean? We're basically trading like algos, because we're trading at precise locations, we're trading at specific times, and precise technical patterns. And our method overrides any indicator, any artificial indicator, any news event, earnings, dark pools, anything, because we know that we're getting in with the institutions at the same time. Today, I showed my traders in the trading room how we had the trigger point and the trade put on before algos fired. And then I showed them how the algos fired at our trigger price. And once we got into the trade, bam, instant gratification, the price went in Nasdaq higher, and even in the Dow, instantly higher. So you can read some of the reviews right here. My time is really running out. Okay. And Basically, we trade an institutional grade trading system. We trade stress-free. There's no stress in trading and there's no fear in trading. I have no fear in trading. I have literally zero stress in trading. We're trading institutional levels. We have precise buy and sell areas and patterns and locations and timings in the market. We use management and risk management. We have high odds, patterns, and setups. We know where and how to place stops. We know trading psychology, and we know exactly what to expect from the market participants, and we know how to put the puzzle together. We do have a special for those of you guys that are interested in trading with me in the Futures Trading Room. It is an institutional grade trading room. It's very professional. We just talk trading, and we provide you with the pre-market game plan. I'm giving you the pre-market game plan live before the trading session open, and I pre-map your trades, and you're going to see how it is going to go with a 99.99999% accuracy. I'm not allowed to say 100%, though it is 100% accuracy, where and how the market is going to react. We're trading institutional levels every single day. We have real-time precise trading. It's 100% guided trading. So on your part, it's risk-free. All you have to do is you need to position size. I provide you all the tools for that. We actually had a group of traders in the trading room that worked on a position size calculator for futures, which you can use to position size. It's actually incredible. And other than that, I take care of the trade. I manage it for you. I do everything for you. 1, 2, 3 trades a day with the exact parameters. We post the trades before they happen. In fact, you receive the pre-market game plan before the market even opens. So you know exactly what we're looking at, what we're watching. We trail it for the life of the trade, real-time response to all your questions. You want to know, it's like, why did you get it here? Why did you trail it here? Or why did this happen? Can you tell me more about this? It's also a mentoring room. We do live screen share. You're going to see everything that we get in and what we talk about, lectures and mentoring throughout the week. We also have on slow days, we have a lot of mentoring and lectures that we're doing. So if you guys want to have access to it, it's $299 a month. We also offer you some bonuses, position size, and money management video course, which is $1,000 value. It's yours for free if you sign up now. And we're also providing you a risk chart for indices and commodities. I also have a separate risk chart for you guys. Like I said, 4 of our members in the trading room have designed this incredible position size calculator that you guys are going to be able to use. And of course, trading guidelines, which is also a $200 value. So you're getting all this and $299 a month. So thank you so much. You can hop on here. It's westmarktrading.com/Metcalf. Thank you so much, guys. I look forward to successful trading with you.
Wow. Anka, what a powerful presentation. You covered so much information, and I think you said you had about already 2 seminars today.
I know, right? And I ran the trading room this morning, and we have 3 successful trades as well.
Oh my God, that's amazing. Well, listen, there were some questions that came up, and let me just pose a couple of them to you. And folks, you can reach her directly. But one of the things was this: do I need to have any specific platform or group of indicators to work with you, or am I free to use any charts that I have?
You can use any charts that you have. We do not have any kind of, special indicators. There's no magic formula. If you're having candlesticks and a couple of moving averages that I will share with you, no problem. And in fact, I share them with you guys right here. We're using very few moving averages. You do not need anything, just a trading account. That's it.
Okay. Another question was this: with regard to futures, have you seen in your experience a difference between trading futures and mini futures?
No, there's no difference. They're exactly the same instrument, and they're carbon copied. The only difference is that the micro futures is 10 times less than the full size contract. So if the full size contract, for example, in Nasdaq, 1 point is $20, the micro is $2, and there's no price difference whatsoever into it. Patterns are 100% the same. Everything is the same. It's only, there's the only difference is that it's smaller in size. That's it.
Okay, but there's enough liquidity and movement in it
Oh,
that.
yeah. There is tons of liquidity in the micros. It's actually unbelievable. There are so many traders that are trading these micros now.
Okay. And to that point, for somebody that's just getting used to futures trading, are micros kind of like a nice way to get your toes wet when you're starting to trade real money? Like
Oh,
the
yes.
kiddie pool? Is that a great way to do it?
Absolutely, absolutely. I'm not a big fan of paper trading. I think paper trading is fine. For the first 2 weeks, do not get very comfortable in paper trading. I know what traders do in paper trading accounts. They like to really go with 10 contracts and 15 contracts, have a 3-point move. Whoa, I can make it trading. No, so paper trade just to learn the platform and get your feet wet with micros. This is incredible. Learn with one micro for the next 2 weeks and then go to position sizing.
That sounds great. Anka, thank you so much for your time. Delightful to see you again. And I hope that you have a great day. You're a busy girl.
Thank you so much, Rolly and Pat. I really appreciate you having me here today. Thank you.